it would seem this is a big reason why the stock has been in rally mode this year, right? We've got talk about AI and Qualcomm suddenly very much in the conversation as an AI stock.
Hey everybody, welcome back to Chipstock Investor. Today we're going to do a quick update on Qualcomm before earnings season begins. Qualcomm, of course, was one of our top picks for 2024, and we wanted to address the rise the stock has had this year so far. If you remember in 2023, Qualcomm underperformed the semi-stock indices with iShares Semiconductor ETF or SOXX total return of 67% to 35% return for Qualcomm, but it did outperform the S&P 500 index at the total return of 26%. But 2024 has been a significantly different story. As of market close on April 15th, Qualcomm's total return is 18% year to date versus 12% for SOXX and 7% for the S&P 500.
So, Casey, short-term stock price performance aside, we felt like it was a good time to sort of recap where Qualcomm is at right now and revamp our thesis for 2024. So, taking a look at the semi-industry flowchart that you so famously made over a year ago, Qualcomm is this well-diversified mobile chip maker. They, of course, have the big IP and patents portfolio for all things mobile communications. They have the old business, the integrated device manufacturing business. Again, it's a lot of those are those mobile connectivity chips. They're on the left-hand side, the IDM part of the market, where they both design and manufacture those devices. And then fabless. This is oftentimes what Qualcomm is most famous for, especially if you have a Samsung smartphone or tablet. You probably see those Qualcomm Snapdragon processor stickers on your device or on the tag. That's the fabless design segment because they design those things and then outsource the manufacture of them to Taiwan Semi or even Samsung. They're in the middle, the chip fabs and contract manufacturers. So that's a rundown of the business model. There were a couple of significant news items, though, since we covered Qualcomm last, just a little over 2 months ago after their last quarterly earnings update. Let's get you up to speed.
So back in February, we outlined why we have 8 to 12% revenue growth penciled in for Qualcomm's big smartphone segment, aided by rebounding consumer electronic sales and Qualcomm's higher average selling prices for 5G network chips. So far, so good. Looking at this chart from tech researcher IDC, it kicked off this week on April 15th, reporting early estimates of smartphone unit shipments rising 7.8% year over year during the first 3 months of 2024. Top smartphone chip customer Samsung held mostly steady at 60.1 million units shipped, and Apple, as you may remember, begrudgingly renewing 5G modem supply agreements with both Broadcom and Qualcomm last year. Their units fell 10% to 50.1 million units shipped. And China's tech hardware giant Xiaomi rallied 34% to 40.8 million units shipped. You may notice that Huawei is not on this list, not been a top 5 worldwide player in consumer smartphone market since the US put sanctions on that company. The IDC report was very solid, but in China, you can remember last year all of the hoopla regarding those Huawei phones, the Mate 60 Pro with a Huawei 5G chip. As a reminder, Qualcomm cannot ship those 5G chipsets to Huawei, but they can sell 4G. We'll see how this report pans out for Qualcomm's revenue in Q2 fiscal 2024, which corresponds to the first 3 months of this calendar year. But early indicators from the last quarter was that this was all good news for Qualcomm, as all the other Chinese phone manufacturers have needed more advanced chips to keep pace with Huawei.
Yeah, that's exactly right. And that's how we're ultimately digesting this IDC report with that big rebound in those other Chinese phone manufacturers, especially Xiaomi, which makes a lot of flagship devices. So, just quick flashback to this quote last quarter from Qualcomm CFO Akash Palkhiwala, where he gave that reminder of, yes, it looks like maybe 5G chips coming from Huawei now. A lot of mystery surrounding how they're making those, as well as the actual processors going into those things as well. At any rate, the end result is Qualcomm has had elevated demand from the other Chinese manufacturing competitors to Huawei. And so, if this Q1 report from IDC is correct, it would seem to jive with what Palkhiwala was saying on the last earnings call.
You may remember that the automotive segment was also set to outperform the very dire looking outlook from other auto and industrial chip makers as well. So let's talk about that automotive segment for Qualcomm. They did have to call off an acquisition of the Israeli chip design and software startup Autotalks. This was originally announced in May of 2023. This was going to build on Qualcomm's momentum as a top supplier of advanced driver assist systems, or ADAS, and other auto connectivity solutions.
So back in spring 2022, of course, was when Qualcomm finished the acquisition of the Arriver advanced driver assist system business from SSW Partners. And this is a big deal. Qualcomm already having extensive experience, obviously, with mobile connectivity via smartphones, applying that technology to the car, which very much is a mobile technology as well. No wire is going to plug into your car as you're cruising down the road. And it's a big need for legacy car manufacturers in particular, because they're not tech companies. And if they're going to compete with their newer rivals, especially those that are completely leapfrogging the internal combustion engine and going straight to an EV drivetrain, they're going to need some help from a company like Qualcomm. So they acquired Arriver. Then they were going to build on that even further with Autotalks. But apparently, Qualcomm's momentum, like you mentioned, Kasey, they were actually forecasting that their automotive segment was going to continue to grow into this year, the first half of this year, while companies like Mobileye, we've covered onsemi and that whole ecosystem surrounding silicon carbide, kind of took a temporary header. Qualcomm, yep, coast is clear, still growing. And then the UK regulators step in and say, hey, maybe Qualcomm acquiring Autotalks is not such a good idea. And so, sure enough, Qualcomm suddenly says, you know what? We don't have a clear path to getting regulatory approval. We're calling off the Autotalks acquisition. Now, there is some upshot, though, Kasey, because a management team is not going to factor in a pending acquisition into their growth guidance. So, what management said last quarter is still very much valid. Let's just take a moment here and recap what our expectations are for Qualcomm for this next quarter, which is going to get reported here in just a couple of weeks. Q1 fiscal 2024, that was the 3 months that ended in December 2023, big year-over-year growth again for the automotive segment, just shy of $600 million in sales. But there's always a sequential decline in Qualcomm's business from the fourth quarter of the calendar year to Q1 of the new calendar year, or for Qualcomm, Q1 of the fiscal year to Q2. So, Kasey, walk us through the guidance from Palkhiwala again, using the Q1 to Q2 fiscal 2023 as a template for what we can expect going forward.
If you happen to watch our video in February regarding this Qualcomm update, you may remember this quote that we made, but we'll just give you a quick reminder of what we said, what our guidance was, what we understood this to be based on what Palkhiwala said at the earnings call. Automotive revenue was $447 million in Q2 fiscal 2023. Of course, that was down from $456 million in Q1, which is typical seasonality after the end of the holiday season. So if Qualcomm is anticipating just a slight decline from the 598 million reported. That implies yet another healthy year over year, high teens percent to high 20% year over year increase in automotive revenue. We were talking about this failed acquisition of Autotalks, and Qualcomm is going to be just fine. A consolation prize for Qualcomm is that they doled out a significant dividend increase earlier in March.
Yes, they did. They hiked the quarterly payout by 5 cents per share. So the total quarterly payout is now 85 cents for an annual per share pay of $3.40. That's an annualized yield as of this recording of nearly 2% based on a share price of about 172 to $173. So paired with the company's ongoing strategic share repurchase plan, that's the light blue bars that build on top of the more stable dividend payment, the darker blue on the bottom. You can see Qualcomm a pretty healthy growth and income investment for those investors looking for that type of bigger, more stable business anchor stock, you could say, in their portfolio.
Okay, so up to this point, we've covered the consumer electronic smartphone market as well as the automotive market, but we haven't talked about Qualcomm's Internet of Things or IoT segment, which is also expected to rebound this year. One thing that's kind of weird about how Qualcomm segments their products is it lumps some of its non-smartphone and non-automotive chips into its IoT catch-all. This includes the Snapdragon X Elite ARM-based mobile processor that we talked about in a video last year.
And right from the get-go, when Qualcomm announced this new Snapdragon X Elite platform for laptops, the pitch was not only was this going to be better than the x86 chips from Intel and AMD for PC, but these were going to be finally a legit competitor for the Apple MacBooks. Those MacBooks powered by Apple's first the M1 ARM-based processors, then the M2, and now the M3. And we're always cautious about reading too much into benchmark tests, performance tests for these devices until they're actually out in the wild. People are actually using them on a day-to-day basis. And we have some real world data to back up these claims. But the early benchmarks are indeed promising. Just pulled this one here from Tom's Guide, and the claim is quite impressive that the standard M3 chip does indeed get beat by the Qualcomm X Elite and these ARM-based Windows laptops. Tom's Guide also provided a table showing various performance ratings, both for a single core and multi-core performance. In layperson's terms, if you don't know what this means, single core performance is probably just your normal run-of-the-mill day-to-day usage of the laptop. Multi-core might be something a little bit more data intensive, maybe editing video, like if you're Kasey and that's what you do with your time during the day, or maybe playing video games, whatever. But you can see there the higher performance across some of these products, especially in the multi-core performance for the Snapdragon X Elite. And of course, there's all this talk swirling around about all the AI training happening in data centers, which means eventually all those AI-powered applications, cloud-based apps that will eventually result from all that AI training, the inference of those apps will need to eventually migrate over to laptops, PCs, and smartphones. So it would appear Qualcomm is very much ready for this movement. And if consumers bite on these new devices, both the Snapdragon X Elite for laptops, as well as the Snapdragon 8 Gen 3 for smartphones, this could mean more growth for Qualcomm in the next 2 years. Again, just like some of the older smartphone bread and butter, it's about higher average selling prices for those chips. So not just a growth segment, but maybe also higher average selling price per chip for Qualcomm as well. It's too soon to tell what would happen, but it would seem this is a big reason why the stock has been in rally mode this year, right? We've got talk about AI and Qualcomm suddenly very much in conversation as an AI stock. And as we've been sharing in various videos, there is the start of a new growth cycle just beginning for the consumer market for PCs and smartphones and laptops. It looks like the bottom was in autumn. Qualcomm as much as confirmed this last quarter. So we're looking to see if that IoT segment rallies along with some of the early reports, including that IDC report that you talked about just a bit ago, Kasey.
With this stock rally this year, it's time to revise our buy thesis. So we went ahead and did a reverse DCF model to see what the market is expecting at the current price. So we'll just run through these numbers. Qualcomm is currently, as of April 15th, 2024, at $172.50 per share, or nearly a market cap of $193 billion. GAAP trailing 12 months earnings per share of $6.90, trailing 12-month free cash flow per share of $8.79, and the blended average of earnings per share and free cash flow per share of $7.85, blended per share profit growth of 10% for 2 years, and then expecting a terminal growth rate of 5% thereafter with a discount rate of 10%. Gets us at the current value of $180 to $181 per share. Do we think this is reasonable?
We think so, especially for the next 2 years. Blended per share profit growth of 10% for the next 2 years during a revived spurt of growth. If that's the baseline expectation that you have penciled in for your expectations, as we do, we think that's a fairly easy bar for Qualcomm to clear. And it's also worth mentioning as well, again, because of that Autotalks acquisition getting called off, we think the balance sheet is poised to continue accumulating cash. We called this out late in 2022 and through at least the first half of 2023 that there was going to be that boom in free cash flow as we came out of the bear market. And you can see in this chart, that's exactly what happened for Qualcomm. Big rally in quarterly free cash flow, and that helped replenish the balance sheet. So we're not back to parity. $12.1 billion in cash and short-term investments, $15.5 billion in debt at the end of calendar year 2023. But assuming there's no further acquisitions announced in the next couple of quarters, we think cash and investments could actually exceed debt again, which gives Qualcomm plenty of firepower for wherever they decide to deploy capital next. So ultimately, what we're saying here is we like the position Qualcomm is at right now based on these market expectations, in spite of the rally in the stock price so far this year. Maybe you don't like reverse DCFs. Maybe you just like using plain vanilla price to earnings and price to free cash flow. Based on historical averages, you can see Qualcomm kind of in the middle of the road there as far as price to earnings. Not a too dissimilar story for price to free cash flow. Still well under 20 times trailing 12-month price to free cash flow. Again, if you believe that there's a new growth cycle starting for the consumer market in the next couple of years, and you think Qualcomm is going to have a pretty strong resurgence per share growth rate in earnings, these valuations look pretty attractive. So you can do your PEG ratio if that's what you're looking at. 2 years, 3 years, 5 years, whatever that may be. And for us, the valuation pencils out as this still being actually a pretty decent value.
There you have it. There's our take on Qualcomm before they release earnings later this quarter. We'll make sure that we keep you updated if anything changes on our end regarding our view on Qualcomm. Make sure you hit the subscribe button if you have not already. We really appreciate it. It's a great way to support the channel by just hitting the subscribe button. We thank you so much for watching. And if you are interested in our show notes, of course, you can check out our shop on Ko-fi or on our Discord channel. If you're a member, you can download those there. We'll see you all later this week at Chipstock Investor.